Everyone, this is Modula and Podrick, and we will be informing you all about what is going on in the digital world.
Welcome to the future humans. Let's start.
The crypto market just got absolutely hammered, and it's left everybody asking the same questions. Was it panic selling? Was it some kind of manipulation? Well, today, we're opening up the case file. We're going to investigate the great crypto crash and find out what's really behind this massive sell-off.
And when I say massive, I mean it. The scale of this is just staggering. We're looking at over $1.14 billion worth of Bitcoin sold off. But you know what? That number, it doesn't even tell the whole story. The real jaw-dropper here is the speed. This wasn't some slow dip over a few weeks. No, this was a tidal wave of selling that slammed the market in just a matter of hours. A move that big, that fast, it sets off all the alarms. So what is really going on here? Is this just your classic case of market panic? Everyone running for the exits at once? Or are there bigger, more powerful forces at work behind the scenes? Well, we've been digging through the data, and we've identified 3 key suspects that could be responsible for this mess. Okay, let's start with suspect number 1. This is the most obvious culprit, a gigantic wave of selling. But the real question is, who's doing the selling, and more importantly, why are they doing it? You see, there are 2 competing stories here. On one side, you've got the rumor that everyday retail investors got spooked and just started dumping everything in a panic. But there's another theory, a much more strategic one. It suggests that this is actually a calculated move by Bitcoin's earliest investors. You can almost think of it like their own private IPO, where they're finally cashing in on some of those life-changing gains. And when we look at the on-chain data, we see something interesting. The selling isn't coming from the big institutions like BlackRock or Binance themselves. It's coming from their clients. Now, that could mean it's the panicked retail crowd, but it could just as easily be those huge early whale investors who just happen to use these platforms. So the data itself, it doesn't really give us a smoking gun. And that leads us to this really powerful point from Wall Street vet Jordy Visser. He's basically saying, look, this isn't panic. This is just smart money management. If you got into Bitcoin early and you're now sitting on billions, taking some of that money off the table to diversify isn't just a good idea, it's pretty much a necessity. So you have to ask, why sell now? Well, for these early holders, it's about finally monetizing those incredible gains. They're looking at other hot markets like the bull run in Chinese stocks or the insane potential for 10-bagger returns in AI. And kind of ironically, as Bitcoin gets bigger and more stable, it actually becomes a little, boring for the people who got rich off its wild early days. But here's the thing. This sell-off wasn't happening in a bubble. And that brings us to suspect number 2. A huge external force that was shaking up market confidence at the exact same time. Total gridlock down in Washington. Yeah, the US government shutdown, it wasn't just another political headline. This thing created a thick fog of economic uncertainty. And whenever that happens, investors get nervous and they start to sell off what they see as their riskiest assets. And you know what's at the top of that list? Crypto. And here's how it directly impacts crypto. First, you've got a data blackout. We're not getting crucial numbers on inflation or jobs, so investors are basically flying blind. It's also put a freeze on crypto-related IPOs. But most importantly, it's completely stalled progress on the one thing all the big money's waiting for. And that one thing is the Clarity Act. Now, this might sound like some boring piece of legislation, but trust me, it is the key to everything. It's designed to finally create clear rules of the road for digital assets. And without it, all the big players, the banks, the hedge funds, the pension funds, they're all stuck on the sidelines. And hey, don't just take my word for it. This is straight from Adina Friedman, the CEO of NASDAQ. She made it crystal clear. Regulatory clarity is the absolute key that will unlock the floodgates for institutional money. Until that door is opened by Washington, the big money just has to wait, and that leaves the market in this weird state of limbo. Okay, but just when you think you've got it figured out, our investigation takes a really surprising twist. Because while everybody has been staring at Bitcoin, the real source of weakness in the market might actually be coming from the number 2 crypto, Ethereum. Now, to understand this, we need to talk about something called market dominance. It's a simple idea. It just shows how much of the total crypto market value each coin represents. So you can see Bitcoin is the king, making up over half the market at 52%. Ethereum is a distant second at 11%. But these numbers, they've been shifting like crazy.
And this chart, wow, this is the real story. In just one 24-hour window, Ethereum's market dominance absolutely cratered, dropping almost 7%. But look at Bitcoin. Its dominance actually grew. This tells us this wasn't a market-wide panic. This looks like a targeted attack, a sell-off concentrated on one specific asset. So this data forces us to ask the really important question. This crash wasn't being led by Bitcoin. It wasn't even being led by the smaller altcoins. It was being led by Ethereum. So what on earth is going on with the second biggest cryptocurrency in the world? Well, the problem, when you boil it all down, is a massive imbalance of supply and demand. On one side, you have huge selling pressure, maybe from those early investors taking profits. But on the other side, the demand from Wall Street that was supposed to soak all that up, it's completely dried up. It's like the buyers just vanished. And when that happens, the price has nowhere to go but down.
So we've examined all the evidence. We've looked at the strategic sellers, the political gridlock, and this crisis of confidence in Ethereum. It's time to connect the dots and deliver a verdict.
And the verdict is this. There was no lone gunman. The great crypto crash wasn't caused by one single thing. It was the result of a perfect storm. 3 different, powerful forces all hitting the market at the exact same time.
Let's just review the final case file one last time. First, you had the IPO effect. Early investors strategically taking profits to move into other hot assets. Second, the Washington shutdown, creating a regulatory vacuum that's keeping all the big money on the sidelines. And third, the Ethereum exodus, a specific collapse in demand for the number 2 crypto, making it the market's weakest link. Any one of these things would have been a problem. All 3 together? That's what created this perfect storm.
And all of this leaves us with one final and really important question. Is this just a temporary churn, as some experts are calling it? A messy period of consolidation before the next big run-up? Or are we actually witnessing the start of a brand new and maybe very different chapter for crypto? That's the billion-dollar question, and only time will tell.